Okay, welcome everybody to this evening's AUDJPY webinar. My name is Nathan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. We'll get into that momentarily. And just to give you a heads up, tomorrow evening I'll be going through a webinar on how to draw support and resistance at 7 p.m. Sydney time tomorrow. If you'll join me, just register at the webinar page. And as well on Thursday, more live Forex market analysis from me. So that's what's coming up from me this week. So everyone, if you can read through the disclaimer before we move along today. For those on our YouTube live stream, I can't see the chat, but I'll give you a link to join us if you want to join us in the room. For those in the room, you can talk to me using the webinar chat box or the Q&A box. I've got both open. All right, let's move along now. If you don't know me, my name is Nathan Cooper. I'm the Senior Market Strategist and Trading Mentor here at AUDJPY. And full-time Forex trader, been trading now in the Forex market nearly 20 years, mentoring for more than 10. If you want to contact me about the webinars, my email is on screen there, duncan.cooper@acy.com. And through the week, if you want to connect with me, you can connect with me at our website. Go to acy.com, go to the Market News tab, or at our YouTube channel, which is at ACY Securities Australia. And if you want to connect with me personally, just head over to my Linktree page, which is on screen, and you can connect with me there. As well, if you want to get access to the chart layouts and templates I'm using in MT4, just contact Nathan.bray's emails on screen. He'll only be too happy to do that for you. And for those in the chat, I'll put the details in the chat momentarily for you. And I'll just need to pause a moment. I have a few problems with my Zoom software this evening. All right, I'll keep going. Hopefully everything's running smoothly. All right, so let's get into news first up. And I'll just get Nathan's details and put it in the chat before I forget. Yeah. All right. So let's just run through the news items for the week, just discuss the red items. So we're in Tuesday. We've just had inflation data on the Eurozone, so I'll have a look, see how that's affecting the Euro crosses. Then going on to midnight my time, Queensland, New South Wales time. Moving into Wednesday, we have the US ISM manufacturing PMI data and jobs, job openings figures. So that can these items can definitely affect the market at midnight tonight. And then into Wednesday evening, 10:50 p.m., we've got the US ADP non-farm employment change figures. Moving to Thursday, 4:30 in the afternoon for the Swiss, CPI month on month. Then at 10:30, we have US unemployment claims. Midnight into Friday, US ISM service PMI data. So quite a lot of US items here. And then, of course, getting into Friday with the US job figures. So 6:30 for the UK construction PMI, which is a minor one. But then 10:30 p.m. for the US, we have average hourly earnings month on month, non-farm employment change, and employment rate. And last month, from memory, unemployment rate was good, went down. So I know we're getting into potentially more interest rate cuts, but the market's going to be looking at the job figures. Are they weakening? Are they still fairly robust? We're seeing a little bit of US dollar strength at the moment as we're heading towards Friday. There are some of these items can definitely affect the US dollar though as we're heading towards Friday. So I don't think the only thing to worry about is Friday. First up today, we've got the manufacturing PMI data. Okay. Job openings. That can definitely affect the US dollar. Leading into that item at the moment, we're definitely seeing US dollar strength. So let's get to the charts. All right, so the dollar index, I've been saying on the monthly charts, watch the 100.30 level. We have been a little bit below it, but we're back above it. Still holding there. So if any data this week's kind of good from the US point of view, then we may well see a move back up from the bottom of this range at the moment. All right. I mean, if we're not going to move below, we have to move up. All right. So it's well worth understanding the position of that at the moment, just to the daily. Very sideways here at the moment, but maybe we're consolidating, ready for a break one way or the other. But seeing as we can't move below supports, we may well be breaking to the upside. So we'll just have to monitor the structure here to see how it continues to form. But if it's dropped to the weekly chart, maybe this week is going to be a week up. All right. Lows on these weeks at the moment kind of equal lows down here for the third week now. Are we going to have a week up this week? All right. Now, the S&P 500 is continuing up. It's just had a day down and then reversed yesterday, and we've had a day up today. So there's another little high bottom forming there. So I was hoping it would come down to support for a dip, but I couldn't get there. So that's just telling you the market's strong. So if you wanted to trade the S&P 500, the 4-hour trend just turned up. I would look for a dip within that 4-hour range and look to see what happens down in the 62 to 79% zone if we get down there. So that would be a great area to look for a dip, because you can see all these 4-hour lows to the left here lining up with that zone. All right. That would be the ideal area to look for a pullback today. All right, euro dollar. First up on the daily chart, might just go to the weekly chart. Of this range, which is 23 high, 23 low. We've been trading well within that range. And are we going to move back below the 79% level? We're pretty much trading down to that level today. But what I can see here is there's a bit of a resistance area over here to the left. And we're maybe forming a bit of a double top here on the weekly chart. So to the daily, I want to, over the last 5 days, 3 of those days have tried to get above 112. 3 times we've failed. And we failed yesterday with big outside reversal candle. So, just taking technical analysis in its basic form, that would tell me that we can't live above 112 and we're reversing down. Already having a day down right now. Next major hurdle to the upside is 112, so that may still get tested again this week. Watch for that later in the week if the job figures push it up there. But I think we're going to start to contend with 111. I see a push down to the 110. All right. So I'm going to move to the 4-hour chart. Now, we haven't had a week down yet, so this is a range of last week, which is very range bound. But the takeaway I get from the price action last week was it's very choppy in here. This is buyers and sellers fighting it out, and they hate it at 112. The sellers are clearly in control at 112. So we may come back up for another rally. If we trade below last week's low at some point, 108, so it's 110.82. So we're a fraction short there at the moment. It's worth putting in, let's say, a line on that low, 111.24. If we get a bounce today, we may only get back to 111.24. So the most immediate trend intraday is down. And if we do bounce up at the moment, 111.24 is broken 4-hour support through where we put in all these lows here. So wanting to get short in line with the true reversal from the 112. See if we can back up to 111.24 and see if we can get a tight entry and get short up there. At the moment, it's just bouncing down there at 111. It might not bounce up for you. So over the next 24 hours, we may slice through 111 and commit below there. So if we do, and you're not short yet and you want to get short, watch over the next 24 hours, then move it back up to 111 and watch 111 to be resistance, right? So at the moment, it's not easy to just get short at the bottom of the day, but looking for some kind of maybe a rally back up to 111.24. All right, and then what happens there? Can get a tight entry and then a tight trend line break down to the downside. Euro yen. Now yen pairs are really difficult because on Friday, I think in Japan they have a new, I don't know if they call them prime ministers. Whoever's in charge of the country, somebody got newly elected, and that was very bullish for the yen. You see Friday's drop. And so we're just reclaiming some of that drop. So the euro, as I was saying last week, this is the same for all yen pairs except for dollar yen. On the monthly chart, we've had 2 monthly candles of rejection in the 79% area here. So it's worth noting where the 79% level is at 157.95, because if we get back down there this month, if we just trade back down within the range of last month's candle and the previous month's candle, back down to 79% level and start to get support down there this month. So just thinking about what could happen through the month. We've rejected there twice, so we could reject there again. That monthly trend is up. It's the same story on all the pairs to the yen, except for the dollar yen. So worth bearing in mind. Weekly trends, higher bottom here. We've put in a higher top to the last, minor top to the left here. So just having a week down, this could be a higher bottom for me here. Like I was just saying about the 79% level, we've already this week traded down to that level. So fraction short. So whether or not we can get down there, but that would be the ideal area to watch for price to get support. Maybe to continue up for another rejection in another month, moving back up the range. All right, so the structure of the day chart here is up. Even though we have a nasty candle down, it is difficult at the moment because that nasty candle down could mean that we actually have a higher top here. Then we've moved down. Are we moving up in that vein? With that nasty candle on Friday, of course, we could be completely false breaking up there, rejecting and going like so. Not easy at the moment. I'm inclined to just watch to see if we can come down to 157.95. So 158 again. And do we get support? Because if we do, this could be a great area to watch to get long. All right, so 4-hour structure is at the moment, there's a higher bottom here. 4-hour structure is actually up. There's a minor higher bottom here. Moved above that top. So most immediate 4-hour trend is up here. Moving to the 15, you can see we're at the 79% level. We just moved down to the 79% level. So you've got, and it's just short of central pivot point. So it is remaining quite bullish intraday because it's not getting below the central pivot point. So seeing a trend line break to the upside from just above the central pivot point and getting support at 79% level, that's certainly the possible intraday support area today. So can you see a setup there that you'd like maybe to get along? All right. I'd much prefer the 158 level, as we're discussing from the high time frame, but maybe price can't get down there. Right, euro pound. Haven't been able to on the day chart to get back up to the weekly resistance area. So we put in another lower top here, been quite sideways, but then another lower top. So today you should be watching 63.40 because on the weekly chart, I think this might be a monthly area. It's a monthly low. we're below that monthly low, and it's also a weekly low, so that's now resistance. So, you know, 63.40, have we commit below there today on the 4-hour chart? Do we come back up? Retest, hold to move down. 62 level up as well overlaps with that level. So do we come up and continue that overall trend down? That fibs. Oh, this fib here is now non-void. Get rid of it. Just get rid of that line. So that's the area there, the 62% level. 83.41. Resistance at 83.40. All right, pound dollar. So weekly chart, we're at off the major range, 79% level, 134.03. I actually got short at, trying to remember the exact price. I think I got short at 134. May have got a pip or two above there, but give or take I actually got short at 134 when we moved back below and came back up to retest it. So while we hold it at 79% level, there's also a resistance area here at 133.57. We're below there now today. So the day chart, it got rather sideways up here. The day up, day down, day up, inside day, rejection day yesterday, back up at that 134 level. So you can see that that 79% level, 2, 4, 5 days you've had a chance to get short up there. I don't know if anyone's got short up there, but I pointed that fib level out last week for our chart. So I actually got short here. So I had to weather a few bumpy sideways rallies. Hopefully now we have certainly we've been sideways and the 4-hour structure's now breaking down. So a minor lower top just there. So if you're wanting to get short at the moment, just want to go back to the daily. Theoretically the structure on the day is still up, but I'm fading that failure at the 79% level. So I'm anticipating that we're going to break below this high bottom and change this day chart structure to down. And then I'm going to see if we start to move down the range. I'm aware that the weekly trend is up. Okay. I'm aware though that it's a key area of resistance over here and 79% level. So that's why I'm going short. All right, so the 4 hours down. So the most immediate intraday trend is down at the moment. I will draw a fib from that minor high at the moment down to wherever the low point is and look for a rally. And I always like the 79% level. So if I wanted to get short today, I would look for a rally back up to the 79% level of the range forming today, wherever that would be. At the moment, it's at 133.75. You can see yesterday, if you took the same tack yesterday, where we had this high to low, and when I was going to bed, price was down here, and then clearly came all the way back up to the 79% area. All right, so just because we're down here does not mean to say we won't get another one of these flush rallies. All right, so I never like to sell at the bottom of the day. That just proves the point that if you're selling down here, you would have to weather all that movement back up. Whereas if you waited for a rally to occur, as and when it comes around the corner, you could have looked to trade at the 79% area up here. Get a much better entry. Now, of course, when you're waiting, price might not do that friendly rally, but that's trading. But yeah, try to sell a rally rather than sell the bottom is, I think, the way to go. All right. So, of course, I'm painting a bit of a downward picture at the moment versus the US dollar here on these pairs. Things can definitely change this week if a US dollar news comes out and dictates. Pound yen. So just to prove the point on the monthly, two rejection candles here down at the 79% level. Yeah, if we got back down there again this month, that would be another great opportunity maybe to get long down there. This monthly trend's still up until it's not. Weekly, higher bottom, higher top. We have just had a week down this week, and we are struggling in this area here. So it is difficult to determine which way we want to go after Friday's decline. Daily, you can see today that we come up and failed up here. This is a little bit of a, it's not a textbook head and shoulder, but that could be a left shoulder, head, right shoulder in terms of what's going on here. So this looks more down, most immediate. If today finished like that, I don't know where today's going to finish. Same on the euro yen. Today could finish positive by the end of the day. But at the moment, if we were just closing now, you'd have to say we're going to go down tomorrow. So maybe the bias of where we're going on these yen pairs this week will be determined by the close of today. All right, 4-hour trend here is actually up because there was a minor top here. It makes that higher top. So at the moment, if you're looking at the most immediate trend, whilst we've been trading down intraday on the 4-hour there, we are coming down from a higher top. So I would monitor that range. Just watch to see what happens within the 627 Amazon zone, and if we start to reverse intraday, that would be the area to watch for. Coming down from a higher top, can get long in or close to this area as it can start to move back up to see if we can move up here. Okay. Now, if we don't come down to this area and we come back up, you can certainly watch 193.52. This area over here. Well, it's actually a weekly area to the left, but it's the same area as this over here. If we fail up here one more time, then of course there's the opportunity to trade down from that area as well. Okay. So that's definitely a major resistance from reference area at the moment. Aussie yen. All right, so the monthly chart, there's your two rejections. Monthly trends up, getting above these highs to the left now. Just holding at the weekly top here. Higher bottom, higher top. This is stronger than the other yen pairs I've already reviewed because this hasn't had a week down. Well, stronger than the euro yen anyway, because the euro yen's had a week down. This hasn't. And I just want to make sure I'm telling the truth there. We did have a week down yesterday. Okay. All right, so weekly is in an uptrend. Daily had that nasty candle Friday. Now you can see today's candle may dictate where we go tomorrow. We're already rejecting that high there. So if we retest that level today, 99.85, go up to the 100 level, that could be a great shorting level if we get back up there again, because quite clearly it doesn't like it there. However, trend on the daily is higher bottom, higher top, higher bottom. So that's just where we are intraday. It's not where we are by the end of the day. So the 4-hour is in an uptrend. There's a minor high here we broke. So I would look at, could drag it up from there, but that's a little higher bottom just there. And again, you could look to see if we come into the 627 zone. Continuation pattern from that area up. On the sell side, as I just said, 99.85, is it? Yeah, up to 100 is resistance at the moment. And if I was to flip the fib around across that range, just short the 79% level up there. So difficult to, maybe we're failing at the top to move down all week, or we're just having a dip. There's two sides of the market there for sure. Don't forget where the weekly trend is up, right? So we also looked a little bit messy, and could we be going short the actual higher time frame trend daily and weekly is up. All right. Aussie, only just holding above here at the moment by the skin of its teeth. All right. Just which that level's at 68.99, so pretty much 6,900 level. So this pair and the New Zealand dollar are very high correlated. The New Zealand dollar pair is already breaking down from the top of its range, or at least starting. This is just fractionally above the top of that range, which is just here. But if we start to see US dollar strength coming in and the New Zealand dollar selling off, this will follow suit. It wouldn't surprise me to see this move down here. So the big question is, do you want to get short up here? All right. If we get up to 69.67, that's 79% level. I've already showed you on the pound, nice 79% failure, potentially. Or it's just, biding its time to fail. Now the weekly trend is up, so we may only just come potentially down from the top of this range, maybe to here. Hold on that support level to continue up. All right, we'll have to wait and see how strong this US dollar is. A US dollar reversing back up, and how strong that can manifest itself or not. All right, so this is definitely a lot stronger to the US dollar, this pair. All right, day chart. Getting wicky up there. Last two candles showed wicks. And before we popped above 66.99, we had a struggle there. So we actually got resistance at that level at 66.99. Came down to this day chart support and then got support from there to move up. But it's looking a bit wicky up there now for 3 days. Close it, you can just watch to see if we close below 6,900, because if we do, I would anticipate we're going to come back down in the short term. It's getting consolidatory here. Personally, if we wanted to get short and the market's very friendly, it may come back up to try to test last week's high and last month's high and fail. All right, so you can look up there for short, because it's really struggling up there. And support at the moment, intraday, because it's very range bound, is on that 68.99 level. So if you're very bullish, that's the buying level. That's the selling level up there. You can see 6,900 is holding at the moment. And what we might see, two things can happen. We've already done it once today. We could come back down here again and hold. So you could look down here to get long, trade up. Up here, if we get back up here, you could look up here to get short, because quite clearly we failed up there once, twice, and a bunch of times there. 3 times, but maybe a few more times in this area. All right. So revisiting up there is very expensive at the moment for the Aussie, but it is getting support at 69. We may see over the next 24, 40 hours that we break. That becomes resistance, right? You can watch that for resistance if you break. Intraday this week. All right, not being able to commit below there at the moment. And of course, today, this is the range of today. If you're looking for a short within the range of today, this imbalance may get filled. 62 levels there. So 69.20 up to about 69.23 would be a good area, or all the way up to that 79% level too. And if the US dollar gets very volatile, you could actually look at all these highs that we've been forming today for this area too, because it quite clearly doesn't like it up there. See, all these highs have been formed at this filling of imbalance here. So that's why I'm saying we could come back up to this area there. All right, so there's a long side of the market there and the short side of the market. All right, New Zealand yen. So the monthly charts. See the rejections down. We haven't been down to 79% level last month. Got support at some weekly support in here. So the monthly trend is up. It's just coming back into a whole bunch of, there's a monthly top over here. There's some weekly highs, weekly resistance in here that we're struggling to get through. Two highs, there's one there at 91.65, 92.19. But the weekly trend is up. High bottom, higher top. It's just like you don't want to be buying into resistance. So sometimes when you can quite clearly see what the trend is, you don't want to buy into two weekly tops. You want to be able to, if the market will give it to you, a user-friendly dip away from that area that you could be a buyer at a lower level. So this weekly level here, 89.94 support would be ideal. That's where we've been down this week already. Down there yesterday, so we missed the boat unless we get back down there again today. All right, so the 4-hour trend is up, day trend's up, weekly trend's up. So I would just look to see if we can get a continuation pattern from the 62.79% zone. So you're buying low so that you can see if you can break above resistance up here. Okay. New Zealand dollar. All right, so here's the range. So this is respected the range a lot more than the Aussie has because the Aussie moved above its range a little bit. There's the range. I said watch that last week. I got short up there at 63.65. That high is at 63.65. All right, I'm thinking this is coming down to here. Now, of course, we can blow through. Of course, we can. That's why we use stops. All right, day chart structure is still up, but you can see we've been rejecting up there. I'm already potentially risk-free. Right, so what I would need is this to move below there. So if you're bullish and you think we're moving above the top of the range, this is the buy level. It's at 62.96. Sorry, 62.98. If we get down there, it proves over there. 4-hour structure's turned down, so that is definitely a buy level low still, but 4-hour structure's turned down. So if you're looking for a short, try to fib across that whole 4-hour movement down. And there's an imbalance in here. Whether or not we come up to fill that whole thing, but this would be the zone to look for if it can be friendly. Might not want to get back up there anymore. Today, we opened up, moving into the new day here. We didn't want to go up. So unless we get driven up by some kind of volatility, you're waiting for some kind of rally on the 4-hour chart. Okay. Now, of course, I've said support's at 62.98 down there for the buyers at the moment. We may, if we continue moving down this week over the next 24, 40 hours, watch this area, which is support at the moment, to flip. Break below, watch to be resistance. You can use that as an area to trade down from if we continue down. All right, dollar Canadian. I've still been very much touting the idea that this is a higher bottom to a higher top on the monthly. And we've got support at a weekly low when we get to the weekly chart. So last month, whilst we did trade down last week, last month's candle was positive. At a 62% monthly retracement level at a weekly support level here. And Forex broke that weekly low there too. Now, I don't know if we can come back down to that area this week, but that area, which is this 134.20, and the higher area is at 134.39. We could certainly revisit that level. Say it was. $134.39. So 134.39 down to 134.20. We can definitely revisit that area this week. So it wants to be nice and friendly. If it comes down into that area, that is support. So if you like that area, to maybe look for an opportunity for price to reverse back up. On the 4 hour, we're already 4 hour high bottoms and tops already. So whether or not we come down there, I don't know. If we're just going to continue the 4 hour trend moving up, grab the feedback on the 4 hour chart and look to 62.79 as an area for a continuation pattern. Back to the upside. Just be aware of where weekly resistance is at 135.88. So if we come up to 135.88 this week and we don't want to move above, then there's obviously the sell side available to traders from 135.88. Hello, Frank. Nothing's changing much. We are monthly chart. We are holding below this monthly low here. Not able to trade to that monthly low. And on the weekly chart, we are putting in a couple of weekly bottoms here. We're back above this one here. And as I've been saying on the daily chart, we're very sideways, consolidating at very historical low levels, which may be suggestive of a move up, like I've been saying on the dollar index. And that orange area is the area I've been painting out as where support is, and you could have gotten long down there last week in this sideways price action. So it's very sideways, very low down in price. I would, I'd still look to this though. So it's 8,400 down to 83.74. That's where support is. We keep seeing pairs to the US dollar moving down. In the likes of the euro dollar, if it moves back up and once more gets back up to 112 or very close to, and then rejects, this will potentially be down in this area, wanting to get support to move back up, because it'll be the opposite. All right, dollar yen. Now, dollar yen is a little bit different to what I feel like I'm seeing on the yen pairs, is because the weekly trend is lower top there, came down a bit mixed in there because that's mine higher bottom, lower top, lower bottom. That could be a lower top. We did trade below last month, this monthly low here. Now we could form a double bottom here to move up long term, but structure at the moment, the weekly isn't negating itself at the moment in terms of its structure. If it takes that, if we trade above this top, it will. But we of course don't have that at the moment. Now the daily, in terms of the minor swings, it's actually turned back down with that horrible Friday candle, because that bottom there, there's a bottom here. So we kind of painted, we went up. We actually put in a little top here, and we came down to that low there. Then we went up to that top there, came down to that low there. Then we went up to there, and now we've broken that low there. So that's just kind of flipped it to the downside structurally on the minor swings. So for our chart, that's the first downward move on the daily. I really would watch this area to see if we reverse down from there. We've been a bit short of the 62. But I can see structurally there, as we're looking at the 4 hour, that we could be forming a little head and shoulder pattern kind of thing. Now, if this obviously, if this aggressively moves down, then we're probably going to see that the pairs to the yen, the other pairs to the yen may well follow suit. So whilst they're looking in an uptrend on the weekly and daily charts, this isn't. That structure can obviously change if this significantly breaks south. What I would look, I'm just biding my time. I'm just looking at the moment, because I'm very aware that dollar yen last month rejected this level down here at 140.24. So we could get support at this low, 141.69. I think we've been down there this week. But through the month, I will just watch to see if we come back to retest this low, 140.24. Now, do we get very much down the range? So to the 4-hour chart, last month's range. This candle. I would look at this low to that high, and watch from the 79% level down to that low. See what happens at 140.24, because we could well come back down to this zone this month and get support. And if we do, then if we once more find support down here and come back up again, that'll be the second time we've struggled down there from a monthly basis. And that could be a precursor to then it moving, having a clear move back up, especially if we get US dollar strength coming in. All right. Let's finish on gold. Nothing much change in my mind. As I've been saying, this is so high at the moment. We all know what the trends are. Monthly, weekly, day trends are up, okay? You want to buy a dip. I've been just having the philosophy of waiting for a dip to the 62.79% zone. Hasn't done that yet. And it may not do that. But what you have to do is, when something's so high, all-time highs, and they're just pulling back, is do you want to be buying so high up at the high or close to? Wouldn't you want to buy at the logical area of retracement from a technical point of view? I would. So I would just say, if it can't offer me what I want to see, and then I'll just leave it alone. So I'd look to see if we can get a nice dip down. It's worth just having a look, because we could get a healthier dip down than what we're having at the moment, where the weekly last weekly bottom came in on that 2-week decline. So on that range, do we get a healthy pullback? Back to this area would be great. 25.31. Most immediate range on day charts there. So I would bide my time and look for a healthy pullback or not. All right. All right, that's my thoughts on the market today. Just be aware of the news coming out later in the day as we move into Wednesday. We've got the US ISM manufacturing PMI data and job opening figures at midnight. That can definitely affect the market. So be aware of that. Maybe you don't want to open a position too close to that coming out if you're just short-term intraday trading. All right, what's that US dollar doing? Is it managing? All right, moving to a further new low for the day. We could be down at 110 by the end of tomorrow. Pound's not been able to rally back up. Aussie's not getting up to that 62 level. All right, so definitely a little bit of US dollar strength at the moment. See how long it can prevail. All right, that's my thoughts on the market today. Hopefully you got some value from that. If you want to join me for a webinar tomorrow, head over to our webinar page link. There is at top. And tomorrow we're going through support and resistance in our beginning webinar series. So if you want to join me for that, just register your interest. I look forward to seeing you there. Okay. Thanks, everybody.